So tell us a little bit about what you were speaking about today. We really enjoyed the point when you mentioned your 10-year view.
Right. What I was saying there is that if you have a 10-year view, it's an excellent time to buy ships. You're still going to have some very tough times. It's not like the markets are all going to turn very quickly. But if you have the capital, and not many people do, that's one of the big problems, you can buy ships now and lever up later. Shoot now, ask questions later. And not many people have the equity to do it. So it's very difficult, and the liquidity and deal flow is very, very low.
Would you agree that very few people maybe share that view with you?
No, I don't think so. I think if you look at the amount of private equity that is fishing in this market today, it's much higher. These guys see that the investment is in shipping is an interesting possibility because the order books are low, the banks are largely out of many of the sectors, and then you also are hoping for stable global economic growth, not great, but moderate, slow to moderate growth going forward. Eventually, demand is going to be exceeding many of the order books. So we're seeing it already in product tankers, seems to be structurally attractive, but also has seen some improving rates. And then you see, for instance, U.S. flag is doing very well, although that's a very niche sector. Crude tankers still very stressed, but we'll have a winter rally as is typical, and Motiva comes online now. That'll add some demand. So that will improve over the next couple of years. Dry bulk, same thing. Order book is dying out. And then you have reasonably good demand scenario globally in a moderate to slow to moderate global GDP growth situation. Containers, some of the companies are already getting back to profitability because they can rationalize their tonnage. So I think there are a lot of people out there that are looking at this and saying, look, the prices are here. It's a time to do our homework. May not be able to pull a big trigger, but pulling a trigger on buying some of the equities, you need a long-term view. And for ships, you need a really long-term view. But I think there are a lot of people out there very interested to take a look at the market.
Another big topic at the Marine Money Conference today had to do with OSG and yesterday's bankruptcy filing. Yesterday, you withdrew research coverage of OSG, and in your note to clients, you talked a little bit about some of the possibilities that might be facing OSG during the bankruptcy process. What do you think's next for OSG?
Nobody knows. Technically, we didn't withdraw coverage. We did withdraw our rating because it's impossible to value the equity such that it still exists. But we'll monitor the situation closely because it's going to be a big topic of consideration for anybody investing in the space, whether it be ships, and you see that Wilbur Ross has exposure to OSG, for instance, at Diamond S, or it be equities. It's going to be a topic, so you have to follow it closely. Look, OSG, it's very hard to sell the U.S. flag in my view. There aren't that many qualified buyers for it. And they all know OSG is under stress, and that market is good. So everyone's going to try and get a deal, and those are the best, maybe the best assets they have right now. Product tankers are improving, and the crude tankers should improve over the next couple of years. So if all that's the case, and OSG structurally just couldn't get through this, and they had to file, and it's a very unfortunate, sad day for the industry, but it may very well have, in 2 years' time, we may be able to look back at OSG saying, that might have been the bottom of the market. Just like we can look back at TK and Torm buying OMI in 2007 saying, that pretty much marked very close to the top of the market. So next for OSG is going to be cancellation of charters. I would believe there are charters in that are out of the money. Not all of them, but or renegotiation. And it's going to be a very long process restating their earnings, their financial results, and the tax issue is an unknown. So I think it's a very long process, rather messy. The ships, in my view, will likely keep operating because that's in the best interest of everybody when you're going through the bankruptcy. So it's not like you're taking 114 ships out of the market. They will all keep operating as long as they can keep their vettings. And clearly a bankruptcy might hurt their their vettings with the majors, but we'll watch that closely too.
And what are we going to see at Clarkson Capital Markets here within the next year? You are operating at an era where a lot of investment banks are pulling away from shipping, and it seems like Clarkson Capital has been growing at quite an impressive pace. What's next at Clarkson?
Well, I'll leave that for my management and Mr. Case at the top to tell you what exactly is going to happen with Clarkson Capital Markets. I'm very proud to be part of a growing business inside of a very large and very storied company in the shipping services business, which is now, it's a natural move in my view for Clarksons to be involved on the financing side, since they are really one of the world's dominant S&P brokers out there. So it makes sense. As well as, and this is my personal view and not saying this is a view of everyone at Clarkson Capital Markets, I think building a business when times are tough and being able to be there and take market share when things get better is the smart way to do it. We'll see new entrants in the capital markets business. We'll see analysts, for instance, I'm an equity analyst, we'll see more equity analysts cover the tickers again when the stocks are up. That's not really the time you want to start. So it's a challenging environment in the capital markets business today for everyone. That's in the newspapers. But this is the time where you build a business when times are tough.
When will the markets be open for shipping IPOs again?
I don't see much opportunity for your traditional IPO in dry bulk. I don't see much, say, in crude tankers, but diversified structures with long-term contracts have been able to issue equity. If you look at, for instance, the LNG space, as well as there's going to be still quite some activity in the offshore space. A lot of people are very interested in LPG. So you have to be focused. For instance, Navios South American Logistics. I was just down in Uruguay, took a look at the business. It's very interesting. That is shipping and it's barge traffic in the Hidrovia region. But over the next 12 to 24 months, I think that will spin out. But you have to have a structure and a story. You can't just simply be crude tankers running spot. There are no equity investors for that, unless you price it at such a ridiculous level that you're giving it away. And people don't want to do that either.